Us across some of the action at the Open today. Julia, thanks so much for your time. First of all, let's talk about what we're likely to see broadly when things open up at 10. SPI futures telling us we're looking at losses of about 2%. Is that what you'd expect?
I think it is going to be a pretty difficult day on the Aussie market, and really we've been hit by two uncertainties this week, one coming through from the FOMC and the widening back of quantitative easing, and the other is the uncertainty around China. We've seen the flash PMI numbers at a 9-month low and a lot of instability in the short-term money markets in China at the moment, so that's going to be a key focus around the region. If we have a look at the leads from the US, we saw the S&P 500 down by 2.5% and an extremely volatile night. The VIX index, the volatility index in the US, up by a massive 28%. And essentially what we are seeing across asset markets is a repricing of the macro view, and it's a repricing given the comments coming through from Ben Bernanke this week. The other thing that we're watching is the China short-term money markets. It's been an extremely volatile week, and in fact a couple of weeks, and there has been some talks that the PBOC has injected some targeted short-term liquidity in both the overnight as well as the 7-day repo rates. And if we have a look at some of the movements that we've seen in this space, it's been absolutely incredible. The 7-day repos have increased as much as it's tripling in the last 2 weeks. We've seen the overnight rates are moving as much as 1/3 in a day, and we've also seen the intraday rates as high as 30%. So a lot of talk that this is a way China may be working on tightening at the moment, but the short-term money markets in China are one key thing to watch around the region today. So all in all, the leads are not good for the Aussie market today. We saw oil prices down more than 3%, gold prices are under 13 US an ounce, and the Aussie dollar once again taking a tumble.
Julia, what about, as you mentioned, the Australian dollar there? What about the leverage to that, the stocks that have leverage to the Australian dollar? Some will benefit in terms of the ones that need to bring their cash back in from overseas. Could there be some bright spots there, or will the overall sentiment just dampen them as well?
Well, the weaker Aussie dollar is a key theme in the market at the moment, and I guess if we have a look at since quantitative easing starting in the US, it actually started in November 2008, and since then it's been good for things like gold in US dollar terms up by 80%, gold in Australian dollar terms up by 30%, and of course the Aussie dollar up by 38% since quantitative easing began. However, what we are seeing is now a reverse reaction in these commodities, and that's because of the macro view at the moment. So if we have a look at a reversal and look at a weaker US dollar environment, traditionally it's good for things like home builders, the energy space and the healthcare space. I guess on the flip side, it isn't good when the Aussie dollar reflects lower global demand, which it's doing at the moment. In fact, if we have a look at home builders in the US, that home building sector was down by a massive 5%, and that's despite new home sales in the US reaching a 3.5-year high, and of course oil prices fell by 3.3% overnight. So if we have a look at that lower Aussie dollar, I guess one of the things that we've been talking about over the last month is investment in overseas markets, and that's been a pretty good one this week. If we have a look at the exchange traded funds, which is traded on the ASX, the IEU tracks the Europe 350 index, and that's actually up 2.4% for the week. If we have a look at IRU, this is the one that tracks the broader Russell 2000 index in the US. This is actually up by 3.4% for the week. So despite the volatility in equity markets around the globe, what we have seen is that huge tumble in the Aussie dollar has seen some of these offshore investments doing quite well. The other thing is, I guess, if we have a look at companies which are exposed to overseas earnings, they've been doing really well. Amcor, Brambles, QB Insurance, Computershare, News Corporation. In the year to date so far, all of these stocks are up around about 20% or more. So these are stocks that have been doing well. Of course, if you are bearish on the Aussie market, you can also take a view as well. And of course, we have the Bear Fund, which is run by Beta Shares here in Australia. BEAR is a stock code, and with the market falling 0.7% in the week to date so far, this is one investment that's been doing well. It's actually up 1.1% in the week today.
Yeah, bet. Julia Lee, Bell Direct, thanks as always for your time.